today, here's the process. We ask that during this panel discussion, you go ahead and mute yourself if you are not the speaker. We will have questions for our panelists, and each question will take approximately 5 minutes. If you have questions, just put those in the chat, and Debbie will be helping Ken keep up with that. And then please stay till the end, and we will answer additional questions in a Q&A session at the end. At this point, I would like to introduce our facilitator, Ken Clark with TW Perry. As he mentioned, he is our Education Committee Chair, and he works really hard with his committee and his the NARI staff to try to think of great educational programming for our members. So this is one of those programs, and we just ask if you have any recommendations for future programming, throw that in the chat, shoot it to a staff member or Ken by email, and we'll get that going. So Ken Clark, without further ado, I'm going to turn this over to you to introduce and welcome our panelists.
Great. I should have music or something, there should be something really get everybody going, get people fired up. First off, thank you very much for attending this, and thank you very much, panelists, for being here. Your expertise is, really a huge benefit and greatly appreciated. I just also want to remind people that, you want to go ahead and ask questions through the chat. I love questions, and I think the important thing about questions is it might be somebody else has the same question, or it allows elaboration on a given point, right? So questions are great. I encourage that, but just please put them in the chat. We're going to start first with the topic of PPP. It seems to be on everybody's mind. Obviously, it was money that was floated. What do I do? How does that affect my taxes and things like that? I'm going to ask some specific questions, but again, we have a little bit of time to elaborate on these things. So I may call in a specific panelist. I may make it sort of a group discussion for all panelists to get everybody's feedback on it. But again, I think more information in an organized sort of flow would really be beneficial to everybody. So my first question is to Aliyah, and the question really pertains to PPP application portals are closing soon. So we keep hearing about this. It's like, well, you got to submit through this portal, but the portals are closing soon. In your perspective, what do our members need to know? And I'm going to float that around a little bit, but I think it's an important question. Aliyah, what is your thoughts on that?
So originally the portal was going to be closing on March 1st, and it could be different for all the banks, but March 1st was the day that the portal would be closing. However, since President Biden passed that new SBA 2-week for small businesses, now the portal is closing on March 10th. So if you haven't applied for the first round or the second round, you still have some opportunity to go and do that. March 10th would be the day that they would close the portal.
Okay. So like you said, that could be different for different banks and possibly different states. Is that just really a bank thing, or is it more just that sort of a universal, like, hey, everybody pretty much is going to be closing by next Wednesday, the 10th?
I personally think that majority of the banks will be closing by March 10th. It's just to give us some time. March 31st is the last day to get the funding done. And You need a good solid 2 weeks to get the process done, from submitting it to SBA, getting the funds from SBA and funding it to the client. So I don't foresee that the banks will be going anything further than that.
All right. Just from our panelists, does anybody have anything to add to that? We got a hand up in Raj's court there. Raj, with the Sullivan people.
I believe most of the banks, I think Sandy Spring will be closing March 10th, but most other banks in our experience will be open until all the funds run out. And we do have Raul, who helps with PPP, and he's an expert. He has been talking to other banks, and most of them still accept application and have not shown any indication that they would be closing their portals anytime soon.
So the suggestion would be to check with your own individual bank just to confirm that?
Correct. And even if your own bank does not accept PPP applications, when you're ready to do it, you can still check with another bank or another lender. There are multiple online lenders that are also doing PPP application who are not in a regular course of banking relationship.
Gotcha. Okay.
We've had experience with PPP1 and PPP2 with probably more than 25 banks. And you find a lot of different characteristics with some applications, and there's different characteristics for forgiveness. But the best thing to do is you got to steer with your bank. They're using different methods and different dates.
All right. So see a professional then, right? Not the guy handing at the corner selling watches or something, right? I like that advice. That's good. All right. For the CPAs of the group and related, and I'm going to throw this question out. So, PPP forgiveness applications in general, is there any information that our group or this audience should know about that? Is there any tips or ideas, just suggestions? Or we pretty much beat that horse to death? We're good? All right.
We can add a few comments about that.
Okay.
PPP forgiveness, first thing you got to do is whoever your lender is, you got to get a list from them or go to their portal. If their portal is open, it will give you a good amount of information on what documents you need to get before you start the application process. There is streamlined and easier version for people who got PPP below $150,000. And then for people who got more than $150,000, the forms and documentation can be a little bit extensive than what it is for other people who got 150 or less. Once you get the checklist from your bank on what documents you got to have ready, you also need some calculation done for your payroll cost. And the payroll costs are defined in the application on what can be included. And most of the times we see that people use a payroll service. Some payroll services will provide you a report which looks like the SBA application which will have pre-filled numbers on there. You can just put those information in the portal for the bank or your lender. And at the end, they ask you for, most of the times they will ask you for payroll tax reports. I don't know if everybody is familiar with those, but those are the ones which are filed every quarter, called Form 941. And some banks could ask you for the state unemployment reports as well. If you're using the PPP for paying rent, mortgage interest, or utilities, you should also have those bills together. And all of that information is fed into the bank's portal. And I'm not sure if I've seen any bank that are taking paper applications. I believe all the banks are doing electronic. So it makes it efficient, no mailing, nothing gets lost in the mail. You fill in the application, you upload the tax documents or anything else they are asking for. And in general, our experience is since they started PPP2, most of the banks are not paying attention to the forgiveness if people are applying for those. Their priority is PPP2, making sure people who apply it, they get those funds before they run out. And then some banks have told us they would, after March 15, they would look at the PPP round 1 forgiveness. And in our experience, the ones we have applied for so far, we have seen some forgiveness being approved. And some came in quicker, some were delayed, but at the end of the day, I think it's on the banks and how much resources they have allocated to PPP Some banks could be quicker and some banks could be delayed.
I'm thinking that the reason why some of the banks are concentrating more on the applications is for the applications, they get paid. They get paid 3 to 5% for the loan. I don't know if they get paid anything for forgiveness services. So they're kind of putting it off. Many of the loans that we've seen are below 150,000. So if you're below 150,000, you can use the simplified version. And many of our clients have received emails from the banks that say, here's the application, it's 1 page, it will take you 15 minutes, please submit. So you don't have to submit the data with the simplified application. You're supposed to make the package so that if the SBA or the bank asks for it later, you have it ready. So it's actually, if you do the one form, you should still do the backup that calculates, what you used it for. And for many of the applications, or many of the applications for forgiveness, it's easiest to use all payroll. For PPP1, if you can use 24 weeks of payroll, it very much simplifies the forgiveness because you just submit your payroll. You don't have to submit rent, leases, or other data. And that's true for PPP2 also. If you can use it for payroll, you'll simplify the forgiveness.
Okay. And I see a common thread here where, again, we need to make sure that we've got the proper package or backup documentation, whatever they might be, in the event that it's called for, that you're prepared to provide all that rather than just a simple application. Real quick, so we have one of our first questions on this is, so what is the time frame for forgiveness? So I'm assuming what is the time frame for the response approval, so to speak? Was that the question, Angela, as you see it?
They just answered my question. I wanted to know how long I can kind of use that payroll to
Gotcha.
report, and how long I have to use that. So if I'm understanding it correctly, it was based on 8 weeks of payroll that I was approved for, but now I have 24 weeks that I can show payroll expenses against that. Is that correct?
Correct.
Yes. And for PPP2, it's anywhere between 8 to 24 weeks.
Okay, thank you.
Rob, does that answer your question as well? Just a simple wave of the hand or wag of the tail or something on that?
No
Rob,
tail wagging. I don't want to see any tail wagging.
might have an animal. I mean, we have animals around. My dog will be in here in a minute because she hasn't bothered me all day. So
I guess the question I had was whether there was a deadline for the application for forgiveness.
For the actual application.
Good question.
Yeah, I mean, when do you have to have your application in to get forgiveness for PPP1? And also, I went through PPP2, and I want to know the deadline for that.
Well,
for the PPP1, like if you, the forgiveness deadline is like once you use the payroll PPP loan for the covered period, so you have 10 months to apply for the forgiveness. So in these 10 months, you can apply for the forgiveness anytime, in which the bank will take, after you submit the application, the bank has 60 days time frame to decide whether the loan will be forgiven or not, and they will ask you for additional documentation, and they will send the application to the SBA, and the SBA has 90 days to decide whether the loan will be forgiven or they need any additional documentation.
Okay, but you said 10 months from the time you were funded?
No, after the end of the covered period, which is like 8 weeks or 24 weeks.
Okay. All right, and I'll follow that up with a question for Aaliyah. I do bank with Sandy Spring, NARI member, and I also wanted to ask, if they're closing the portal, what would be the best way for me to file my application?
So Rob, is it your first or second loan with the bank? I believe it was Rob that was.
Yeah, it was Rob.
So it depends, because if it is your first application, then I can have the team send you the link, and you can fill it out, submit it, so we have it. The other option is if you've already submitted the first round, then I can send you the link myself, where you just log back in and apply for the second one. If you want to have the same amount as the first one, you don't need to provide any documents. You just complete the application and submit, and then we'll send it over to SBA immediately. But if you want to do an increased amount, then we need updated documents from you to underwrite that loan once again, and then submit it to SBA.
That's not really my question. I was actually funded for both PPP1 and for PPP2. And I'm looking to get forgiveness now for PPP1, and how would be the best way for me to apply for that? If the portal's closing, is there another way for me to go about that?
Okay, so I apologize. I was mistaken. I thought you asked if you could apply for PPP. Okay, so PPP forgiveness, how the portal is not closing for PPP forgiveness. The portal is closing for round 2 PPP. The PPP forgiveness will start back up on, I believe it is March 12th, when we started back up, and you are going to be getting an email. The way Sandy Spring Bank is sending it out is through Waves. So from the date it was funded. And so depending on the day that you got funded for the loan, your invite will be sent out accordingly.
That's great. That answers my question. Thank you so much.
You're welcome.
Yeah, I'm sorry. There was probably some miscommunication on my part, because really we had two different areas of questioning here. We had sort of the actual application to get the PPP, and then we had the other question about the application for forgiveness. So I apologize if I commingled those two things. Like the way I did that with my fingers. It's kind of a visual thing. Gets people thinking.
Totally visual. Did you see Eric's
Did you
question?
see, yeah, did you see Eric's
Yeah,
question?
we're going to get to Eric now. So do you see any reason why some are approved, so some applications are approved versus others that are not? Does anyone want to take a bite out of that question there?
Now,
Aaliyah?
are they talking about round 2 PPP, or are they talking about forgiveness?
That's a really good question. Forgiveness.
All right, so forgiveness, it would be if the funds were not used for payroll, if the funds were not used for the lease or the utilities, just what it was set out to do. If the funds were not used for that amount is what would not be forgiven.
So is it possible that maybe someone applied for forgiveness, but they didn't put in the details of exactly how it was used, and then automatically just got kicked back as not approved?
So I can't speak for the other banks, but the team that I am leading for forgiveness, we are making sure that the client has a complete package before we move it over to SBA, because we do not want that 60-day time to click and start for them, and then they don't get any forgiveness. So we are making sure that they have the payroll documents, they have the lease documents, they have utilities, whatever they have set out to be, and for 8 weeks versus 24 weeks, we are collecting all the documents and doing the legwork for the client before we submit it to SBA.
Eric, I hope that answers your question. If there's nothing else on this one, I'm going to move ahead to the next question, which is in regard to tax rules. So your PPP tax rules. It's an understanding that most states are not conforming with the IRS. So that's just sort of a general overview. What recommendations do you have for our members? And again, so is that a state thing? Obviously IRS is government, but any thoughts on that particular question of non-conformance, and what are the recommendations to kind of work within those parameters?
It is a state-by-state decision. I actually heard that Virginia over the weekend has agreed that they are going to somewhat follow conformity. They will allow, so the PPP money isn't taxable, and they will allow up to $100,000 in expenses. If you're over that, the additional amount over that you'll not be able to deduct that from the state tax returns. But if you've got any filings in additional states, it's going to be a state-by-state basis. We've got clients all over the country. I was communicating with the client in Minnesota yesterday, and Minnesota has not made a decision yet. So we've actually been recommending to a lot of our subchapter S and partnership clients that they may be best served at this point, especially if they're in the state that has not agreed to conformity, to hold off on filing their taxes, because otherwise it's going to be taxable at this point. And then if they do agree, they're going to have to turn around and file an amended return. The one thing about Virginia is the legislature did agree to it over the weekend. It's been sent to the governor to sign. He hasn't signed it yet that I'm aware of. So we need he's got to sign it before that's going to go through.
Is there any recommendation on just, applying for a continuation rather than just going ahead and submitting your returns?
Right. That's what I was saying. If you've got if your state has any concerns for conformity, you're most likely better off filing the extension for now.
Okay. Yeah, and that seems to be a fairly common thing anyway. It's like, look, if something's in flux, let's just file an extension, and that gives us some time for things to kind of get a little bit better formulated. Because I hear that on other things, not just PPP issues, but my own accountant, if I don't give him my taxes on time, he's like, Ken, I'm just filing an extension. I can't do this like the last day, right? So you'll get it this summer sometime, which is okay. So anyway, all right, great.
Let me add something to what Joel said.
Yes.
He talked mostly about Virginia. For Maryland tax purposes, Maryland conforms to the IRS, meaning the PPP that you received is not taxable income, and the amounts, as long as you spent it for payroll and other expenses, they are deductible for tax purposes. For DC, it's the same thing. If you received the PPP, it is not taxable income. If you spent it on payroll and other business expenses, it is also deductible for state tax purposes. So if your business is in Maryland, DC, we do not see a reason why you would want to file an extension, unless if you have other reasons. There could be some other reasons where people want to delay their tax filing. So basically what it means is if you received $100,000 in PPP and you spent it on business expenses, you can deduct all that loss on your company. And then if you're an S corporation or partnership, you can all of that expense becomes deductible on your personal tax return and lowers your tax liability. The only thing for Maryland tax purposes would be a lot of Maryland businesses received grants. There were state grants, county grants. We have a very long list of grants which were received. Those grants are taxable for federal income tax purposes. So if your business received, let's say if you're in PG County, you received $10,000 grant, it's taxable income for your federal income tax. But DC, about 10 days ago, or Maryland about 10 days ago, the governor passed a new relief bill, which says if your business received these grants, you can exclude them for your Maryland tax purposes. So if some business received $10,000, they pay 8% Maryland tax. That's a tax saving of about $1,000 approximately. However, the forms for those deductions are not ready yet because it was just passed. The comptroller's office in Annapolis is working on getting those forms ready. So if your business received any of those grants, you should let your accountant know that those grants will be non-taxable for Maryland tax purposes. And if needed, they should extend your tax returns because more than likely, it looks like those forms may or may not be ready by March 15, which is the initial due date for filing the business and partnership and S corporation tax returns.
So therefore, if you received PPP money and no grants, Maryland and Virginia, excuse me, Maryland and DC are okay. You're okay with that as far as PPP. But as far as Virginia, you got to keep in mind, Virginia tax return is not due until May 1. So as far as your federal return, it can be completed. Many of the businesses in NARI are operate in Maryland, Virginia, and DC and operate as S corporations. So those companies, with regard to federal, if it's just PPP money, for Maryland and DC can proceed. There's not a reason not to proceed. It's only Virginia we're waiting on.
Gotcha. Okay. All right. Well, that's great information. Is there anything else that either anybody else or the other panelists would like to elaborate in regard to additional information that our members should know in regard to PPP and your tax preparation? I mean, I keep hearing, hey, we've got to make sure we've got all the documentation, make sure you're prepared, make sure you understand the deadlines, work with your bank. Obviously, there's a lot going on here. If you've got, your accountant, certainly be, leaning on them. And obviously, so is there anything else that our panel has to say about that? Kim, you've been kind of quiet up there. What are your thoughts?
Actually, I just moved to Virginia and I didn't know May 1st was our new deadline. So I don't specialize in tax. I just know the basics, but everything I've heard is exactly what I've been reading and confirming with my own CPAs that I work with.
Right.
So, yeah, it's all consistent from what I'm hearing.
The individual return is due May 1st. However, S corporation partnership returns are due before that.
March. Okay. Yeah.
So they're actually due April 15th.
What I just would like to add is that you are using a third-party payroll provider. Check with them because some of them already formatted some of their reports to make the filing for forgiveness very easy. I know that I've been running reports on the third-party softwares to use. I've been helping gather the information to submit.
Great point.
Yeah.
Okay.
Debbie, do you have your hand up?
Oh, I was trying to make sure that Tim's question was answered, but I believe Alia answered it regarding, he was under the impression that the bank would invite them to apply for forgiveness. Sandy Spring had not opened that up to him yet. So Alia, was that your response to him?
Yes, I personally responded. Two of them responded to me as well personally, and I responded to them. But if they need further clarification, please do ask.
And so banks basically, Alia, they have to close the application for the loan portal and then they open the forgiveness one. Is that correct?
Yes, and it's going back to what the three gentlemen in that room, I can't remember the name of the company. Yes, what they were mentioning, it's the resources. That's what it comes down to. And also as a community bank, we don't have the resources as, Wells Fargo, Bank of America, the bigger banks. So we have a portal that we have open and we're utilizing that. We utilized it for round one. Then we kind of changed some things to make sure they came in compliance with SBA for the forgiveness. And then we had to close that off to make some changes for round two. So now when we close off that portal, we want to make sure that everybody that has applied for round two, we get them from A to Z and processed, and then go ahead and get back onto the forgiveness side of it.
Okay.
But it's basically resources.
Great. Thank you so much for that response. And yeah, I assume that your question was answered there. Tim and Rob also jumped in on that as well. We're going to move away from PPP, if that's okay for everybody. We're not going to talk about golf or going out drinking or anything like that. We're going to move into tax filings and deadlines. And really there, I think really the big question is has anything changed, right? I mean, the world kind of changed on us. People are kind of concerned, gee, I used to be able to, deduct this as an expense because I had an office or whatever, but now I'm working out of my home office. Our travel has changed. So a lot of these deductions that maybe we thought about before, we don't really have mileage and things like that. is any, I guess, do we looking at other changes? So those are things that are in my head, right? But I think from a company's perspective, especially if you're a smaller company, you're running the show, you're doing your own, you're handling your own finances. Are there things that maybe that happened in 2020 that are going to be effective, you know, for your filing this year, or things that they need to start documenting in 2021 in preparation for their taxes a year from now? And that's going to be kind of like thrown out to the group. Does anybody have any thoughts on that in particular? Raj's group always has some, they're like, they got the fountain of knowledge over there.
There was one thing that happened in Maryland that was pretty significant. A few years ago, as many of you know, if you looked at your taxes, they limited your Maryland income tax deduction on your federal and your real estate tax, they limited to 10,000. It was called the state and local tax limit. So no matter how much state tax you paid, you couldn't deduct it on your federal because you're limited to 10,000. So Maryland kind of fought back with respect in November, and they passed a workaround so that if you have an S corp or a partnership in Maryland, and for the shareholders you pay the Maryland state tax, you can deduct it on your company tax return. So in essence, it lowers your net income on your company tax return, thereby giving you an unlimited deduction on your federal return for the state tax paid, which can be significant because some people, if you pay 40,000 in state tax, the deduction on the federal ends up being 15 to 20,000. So for partnerships and S corporations that we do work for, they all got payments in November and December, and that way it made their state tax deductible on the federal because it lowered their business income. And this goes forward. If you did it in 2020, that's fine, but it's applicable in 21 and on forward. So if they continue to limit the $10,000 on your itemized deductions, at least for business owners that have an S corp or have a partnership, they can deduct their state tax on the business returns, and it ends up being a deduction, and it's really a significant change. It would only apply to business owners, meaning if you have a W-2, it doesn't apply to them. It would only apply to business owners that have partnerships and S corps, which our experience is, if you go out there in the real world with respect to small business, many of them, 18 out of 19 businesses out of 20 file as S corporations.
Wow, significant. Interesting to know. Joel or Melanie, any thoughts elaborating on that?
Yes, I wanted to, it was going to be actually my number one thing to address as well. So a little clarification. First, it's not just Maryland, it's the IRS has approved it. So it's applicable to all states. Now, S corporations and partnerships normally don't file or pay income taxes. The taxes are passed through to the individual. But what this is that in certain cases, particularly if you have an out-of-state shareholder or an out-of-state partner, then the business is required to pay taxes. And you know, as he was saying, traditionally, those taxes were then reported on the individual's return, but if they were capped at that 10,000, they got no benefit to it. So now the business can actually write those taxes off.
Okay. Interesting.
Another thing I would like to address, because, you know, it's been the law for a couple of years now, and yet there's an awful lot of people that still don't seem to realize it, is that if a partner in a partnership has personal or expenses related to the business that they weren't reimbursed, they can do what's called unreimbursed partnership expenses and write those off on their individual tax return. For an individual who maybe has a sole proprietorship, that's not a problem. But if they're a W-2 employee or they have an S corporation, the IRS more or less did away with a lot of those expenses. if you have an S corporation, the way to do about it is to have a reimbursable plan, but you need to have that plan in place rather than just, willy-nilly trying to write off the expenses. So that the S corporation and the shareholder should have a plan, a written plan in place saying that the person will be reimbursed for those expenses. And then that way the person won't be writing them off on their individual return. The business will actually write them off.
Gotcha. I like that. Yeah, willy-nilly is not a good friend of ours anyway, so that's good to know. Appreciate that. All right. Question about deadlines, because that always seems to be like the thing. It's like, oh crap, I wake up this morning and what do I got to do? And oh, that deadline's coming up. And by the way, there's another meeting after this, right? So anything to be said on that? I know we talked about extensions, and if things are questionable, it's best to go that route. Is there anything that straight up we got to say, hey, there's some serious deadlines on some of this. We've talked about PPP, but in far as the tax areas go, is there anything that anybody wants to elaborate on that?
Talk about the deadlines. In general, the business tax deadlines are March 15th. For federal income taxes, states could have different dates, like Virginia or Maryland for S corporation and partnerships, they have April 15th. For your personal income taxes, for federal level, they're due April 15th. There is some talk about IRS extending the due dates like they did last year to July 15th, but nothing's done yet. And Maryland did extend a few of the deadlines to June 15th. That's for people who live in Maryland and make estimated tax payments. Instead of April 15 and June 15, they can make those two payments by June 15.
Okay.
Virginia does have a gross receipts tax. Most of them for various counties were due on March 1st. And they do have another personal property tax deadline coming up in May. For Maryland, personal property tax returns are due April 15. There is an option for a 2-month extension. For DC businesses, the personal property tax returns are not due until in July. So they have some time. And DC, as of now, has not extended any due dates that we know of. Same for Virginia. They're all sticking with the original due dates where the business returns due April 15, personal tax returns due May 1st. And everybody has an option to apply for an extension. If you use an accountant, the accountant will file the necessary forms electronically. If they think you have a balance due, they send you payment vouchers to make those payments so you don't end up owing a penalty.
Great information.
I just want to add to that, I do a lot of sales tax returns, and Virginia has the same deadlines. DC has the same. I think it's a state to state. So just go to the revenue department for each state and make sure they haven't extended the sales tax, because California, I do a lot of California returns. I know we don't have any Californians in here, but it does change and no one's aware of it. So I do a lot of cash flow management. So just be aware of those changes and check with your revenue departments in your state.
That's great advice.
So again, like he said, Maryland's done a few extensions. States can, at the state level, certainly can go state to state. You just need to be aware of or check with your accountant to be aware of what's going on with your state. On the federal level, Texas is now extended to June 15th because of the blizzard, but everybody else is still the regular deadlines. And as the gentleman from Sullivan mentioned, there is some talk about it. The House Ways and Means Committee has approached the IRS twice now that I'm aware of and said that they are gravely concerned about the flow of work As of the last week of February, they still had 6.7 million returns that they had not processed from last year. There's a lot of other things that just are not moving. Most offices, though not all of them, are back open, but there's a lot of IRS agents that are still working remotely. They're still going through mail. And now we're dumping a whole new tax season on them. And the House Ways and Means Committee just feels that, that alone is trouble. And then you've got all the new tax laws and it's a lot. And they're really worried it is a recipe for disaster. So they are pushing to get it extended. Whether we'll see it extended or not, who knows?
Gotcha. All right. Again, very good information. Appreciate that response. I think that, we're kind of going to move off the, this sort of specific subject, but one of the key things that I look at every year, and I'm sure most people do, is, what should I be doing this year? And I kind of touched on this question before, but I don't know if we really put it out there all the way. But in preparation for next year, is there anything, best practices that maybe is different, new, changed, or something that we don't really pay attention to that we should be doing in preparation for the 2021 tax season? And again, I know that we've elaborated on changes. We've elaborated on some things that are still fluid or in flux, at least, where they haven't really have any firm dates or processes yet. But is there anything that our membership, again, thinking about, you've got small business owners, they may not have a lot of resources for accounting and things like that, but what are just, sort of good practices for a lot of our guys that are running these smaller operations and, gee, damn, I really need to be, documenting this or collecting that. Is there anything that you guys see when you're out and talking to, our sort of clientele that, gee, I don't know why, but everybody kind of keeps missing this, or this would be a good practice to get into? So I'm going to throw that out to the group, and I'd like to go around to everybody and just get your thoughts on that. We'll start with Kim because she hasn't had a lot of airtime. So
I'm fine with not having airtime. I've been just frantically taking notes because I'm not a CPA. I know the basic tax code, but it's always, I have a network of CPAs that I always take notes from and listen to. So the biggest thing that I have to say is cash flow. When you don't know what money in the bank is actually belonging to you, if you don't know what that answer is on a regular basis, you're going to get into trouble regardless. With all these changing deadlines, last year we saw the biggest stretch on cash with my clients because everyone's like, oh, I have till July 15th. Well, everything was due in July last year. And I hope and pray, I know if there's some people that are suffering cash wise, but if you can keep on the current deadlines, stay with them and plan ahead. Don't assume that you have enough cash by just looking in your bank account. Make sure you're looking at your vendor liabilities, your outstanding loans, your all that, and then deduct those. I always say, if you were going to leave the country, well, if we could actually leave the country right now and go to France and, run off with somebody, what would you take in your pocket? That's the question you should always ask yourself. Okay. So it just has to do with cash management. And I do a technique with each of my clients. It only takes like 5 minutes. Once I teach them how to do it, they know how to do it. And they're better off for it. So my biggest piece of advice is cash management.
that's great. That's great. Yeah. Why don't we go to Joel? Joel, any thoughts on that?
On the cash flow, no. A couple of things to be aware of, though, is that for 2021 and 2022, instead of the traditional 50% meal expense, the IRS is actually going to allow a 100% deduction for meal expenses. You just need to be aware of that they, one, have to be business related, two, have to be provided by a restaurant. So if it's not a restaurant, you're stopping at 7-Eleven and grabbing a sandwich, it's That's not a meal expense. And three, and again, this isn't something I think everybody really was aware of, is that entertainment expenses are no longer deductible. So if you have attended an event and the event was $100 and the meal cost of it was $30, that's what's deductible. Not if you're taking, in other words, you're taking a client saying, here, I'm taking you to this event. Not that many of us have done them in the past year, but hopefully we will be this year and next year. Only the meal portion of it is deductible.
Okay, that's good to know. So my golfing buddies, they can pay for their own golf and I'll just buy them a beer and a hot dog. Good to know. Angela's got $100. Angela, I think, I'm sorry, but you're gonna have to up the ante here. $100. I don't, maybe way back in the
He
day.
asked what I had ready to leave the country. I got 100. Somebody else gonna have to put the rest of it.
Yeah, well,
I
hey,
don't think I'm getting out of the country. I may not even get out of the county.
I'm thinking if I go, I'm not coming back. Okay,
Right.
so he's gone. He disappeared. He doesn't exist. I'll be living in a cave or an island. I always go, I'll go live on an island and eat coconuts. Like, who would really actually? That's not practical, right? Because you're gonna need some beer and wine and whatnot to go those coconuts. So hey, I need a little bit of money. All right. Kind of same question. What are the things that we should be thinking about and best practices? And I just want to ask Alia, is that something that at your level, does the bank look at things and always like, gee, what is with these knuckleheads? They keep on doing this and they really should be doing that. And I'm sure you don't call your clients knuckleheads. I do, but that's okay.
Like, no, we don't really call them knuckleheads. But I just want to say with the pandemic, there's a lot that all banking institutions have kind of cut back on or made it a little bit more difficult for clients to get funding, especially if they are in the restaurant industries or that. But for contractors, in remodeling businesses, they are still doing fairly well. So it is still easier to get a loan or a line of credit. And, cash flow, like Kim mentioned, is so important. No, Angela, I will not do that. So my only thing is just before you submit for your loan or line of credit, speak to your banker, give them your financial picture so they can say, okay, you know what, this is what it looks like based on what the pandemic did. Just don't go in and blindly apply. That's what my recommendation would be.
No, that is good. That is good. All right. And I want to just also hit the Sullivan Group with the same question.
The biggest thing we see, and when I talk to a new client, the previous CPA firm, many times they don't do what we call tax plan. If you have a business, the best thing you can do towards the end of the year is get your year-to-date income statement through October or November and see where you are as far as taxes. And if you got to make any moves, the moves that commonly are recommended in the construction industry is they buy a truck, which they can deduct 100% if they're over 6,000 pounds. They contribute to their pension plan. They make payments they need to make. And then at that point in December, they know where they are as far as taxes. But if they don't do that with their accountant, then what happens is April comes around and all of a sudden they owe 25,000 and they didn't plan on it. So they should know where they stand and ideally pay it in December before they move on to the next year. And that's a step that all CPA firms should take with all their business clients. And some of the people do it, but we do tax planning for every single client, and they make moves before the end of the year because you can't do it in March and April. That's the biggest practice they should do. And then secondly, there is something out there that is new. We omitted it before, and it's called retention credits. Retention credits is a credit you get up to, in 2020, up to 50% of $10,000 that you pay to employees. So basically, you lower your tax deposits. If your revenue in 2020 has gone down 50%, but in 2021, it's 20%. So if your revenue's down 20% versus 2019, you can get a refund on payroll taxes for in 2021 up to 70% of the $10,000 that you pay employees. So the payroll services all know about this, and so should your accountant. So you should visit this with them if you have a reduction in 2021, it's only 20%.
Okay, that's really good advice. I like that. Go
Uh,
ahead,
something
Joe.
something else I wanted to bring up. I don't know if we have any sole proprietors in the group, but if we do, there is a refundable credit for 2020. If you are a sole proprietor and you missed time from work because you were diagnosed with COVID or you had to take care of a family member that had COVID, for up to 10 days, you can get a refundable credit of up to $200 a day for up to 10 days. If you were unable to work for that period and it affected your business.
How would you go about proving that?
I mean, you know, one thing I'm sure you could show is that if you were ever questioned, you probably got some sort of doctor's notices or hospital bills for COVID. Would be one thing. And if you had COVID, I'm sure you weren't working.
Yeah, I'm sure that too. So, all right, well, great. That is really great. All right, so basically we're going to kind of start wrapping up here. I know that you'd hate to leave, you know, this little session here, but are there any last questions from the group rather than the use of the term knucklehead in the appropriate, you know, really language? Does anybody else have any other questions for our team? You guys have all done just a great job, and I thank you so much. And, you know, I think it really is, it's things like this that are valuable to our group. And again, I'm going to encourage everybody to, you know, reach out to professionals. You know, I might be a professional in one thing, we're not sure what yet, but we'll get there. But, you know, a lot of these guys, you know, Rob Medley, he's an electrician, and that's what he does. So I wouldn't hold it to Rob. I wouldn't go ask him a lot of tax questions, even though I'm sure he's very knowledgeable. But again, this is not our area of expertise. So we really appreciate this panel taking your time to give us that information. And I would encourage, you know, if you don't have, you know, and this is to our membership group, if you don't have somebody that's looking out for your best interest, you really need to do that. I'm an accountant. I don't have a lot of money, but I'm an accountant because I do have certain things that, you know, I play with, and I rely on them to kind of give me the straight scoop and get me, you know, squared away. So again, I think it's just one of those things where we have those professionals available. They are right within our NARI organization. So I certainly would encourage, you know, patronage to these people. They're all a wealth of knowledge. And I think we're very fortunate to have them in our midst. So if there's no other questions, and we'll leave it for, you know, like the 3-second count, you know, 3, 2, 1, looks like crickets. So again, thank you all for coming. And obviously there was a lot of great takeaways here. And I do need to thank Angela and Debbie for setting this up. It's actually in my script. Okay, I just want you to know. Thank Angela and Debbie right here. And I couldn't believe they did that. I was like, well, I thank them anyway, but
I copied it from Sharon's from the last one we had.
So, yeah, well, hey, you know, somebody has to keep track of me.
Somebody has to praise me.
Yeah, well, we want that, and they really do deserve it. So, you know, I talk about being sort of the chair of the education committee. I really don't. It's really Debbie and Angela that do all the work. I just like sort of show up, right? But anyway, they do a great job of putting these things together. But I got to tell you here too, and one other thing that's sort of really important is we are always looking for interesting topics that we can bring to our members. And I can't emphasize that enough. If you're seeing something, and you're all a great wealth of knowledge, and even our members, if there's certain things, topics, discussions that we need to be addressing, we need that information. You know, we need to be a valued resource to our membership and our sponsorship. That's really what, keeps this whole thing together. So it's greatly appreciated and well accepted. We don't look at it as, gee, why don't you talk about this, that, or whatever? No, these are all great topics. If it's important to you, we need to float it out there and see if it works for other people. So we always encourage that feedback. And anytime you get an opportunity, shoot a note out to Debbie and Angela, myself, obviously. Again, we're always looking for, just, great content that we can put out to our membership group. So anyway, that's really all I've got to say. I'm going to turn it back over to Angela and make sure when you get that little rating thing that I'm getting 5 stars. All right, Angela, you're up.
I feel like I'm on some sort of game show. Thanks, Ken.
Yeah.
Here we go. So coming at you, our very own Debbie Kane will be in touch with you after this. We'll send out the YouTube link to access this recording. She will send out SBA guideline page that we are going to be getting kind of, I think that's a guideline for some of the forgiveness. It's just a sample. Each bank, as we've learned today, has their own. So please note, this is just kind of a sample that'll help you know some of the things you might need to put in that application for forgiveness. We'll be sending out the panelist contact information so you can reach out to them directly. If you don't have a great trusted resource for your financial health, please reach out to one of them. As a NARI member, they have been vetted just like you have. We will send out year-end checklist from KMM Consulting. Kimberly's going to get that over to us. And I think that's about
She
it.
already did. I have it, Kimberly.
Kimberly's already given that to Debbie. See how efficient they are. And that wraps it up. Debbie, what's our next event?
March 24th, we have Ferguson Samsung event. That'll be educational webinar. And then we will roll into a happy hour for those that want to stay on and have a
And
beverage.
that Samsung event, that's on smart home technology and things like that. Is that correct?
Yes. And they're going to talk about some appliances too, I believe. Yeah. I just don't have it in front of me. Yeah.
Great. Thank you. All right, everybody. It is after 5 o'clock right here. So enjoy your evening. And if you need anything, don't hesitate to reach out to us. Thank you so much for attending. And thank you to our panelists. And thank you, Ken Clark, for being our game show host today.
Great job, Ken.